Hi guys and welcome back to Yashi. Today we're talking interest rates, inflation, real estate and much more. Normally I tend to do everything on the same day where the Federal Reserve releases an update. This time I decided to wait a little bit, look at some of the influences I really like. Clear value tax has always been amazing, especially more on the financial side. I tended to wait this time, just see what happens and then put out my information, my data and my opinion in all of this. Of course, my perspective is more related to real estate, so let's get right to it. 2 days ago, the Federal Reserve Jerome Powell, actually it was yesterday, spoke after the inflation report we saw the day before, which was pretty positive. Inflation for the past couple of months has been actually trending down. It didn't reach the 2% rate that is the Federal Reserve, let's say, most important target. However, it has a downtrend. And that's why yesterday Jerome Powell said that he will not raise interest rates this time. And we gotta see what happens next time. The fact is they will not raise interest rates this time. They also released the assessment of appropriate monetary policy that we see right here. Assessments of monetary policy. As you can see, the interest rates today are between 5 and 6%. And if you look this on a global scale, China, Europe, Africa, this is probably one of the highest interest rates you can find in the areas, which means that America has one of the highest and biggest safety cushions in case an interest rate, let's say, lowering is needed, for example, through a crisis, which means that from a financial perspective, actually, America is on one of the safest spots. Unfortunately, when it comes on the government side, this could be an issue for the government. Hence, we saw so many government debt crises in the past year. With that said, we also have, finally, for once, actual data from the Federal Reserve of what the expectations are for future interest rates situation. And just by looking at 2024, we can see that we're expected to see some interest rates lowering in the future, between 2024, 2025 and 2026, all the way to after 2026, between 2 and 3%. Of course, this is only what they expect if the trend that we saw with inflation will stay the same. In parallel to all this, something very positive, while all financial analysts have been very negative in 2022 and 2023, talking about a hard crash because of high interest rates, because their general opinion was that we have so much free money. We got so used to free money in the past couple of years that now that interest rates are so high, it will destroy a couple of businesses, kill many businesses, bring to high unemployment. Actually, what ended up happening is that the US consumer was actually much stronger than expected, that the job market is still very positive. If you look at the past job market report, unemployment has actually been going down and we're employing more people than ever. Not the lowest point ever, but still at a very good point. So good unemployment, inflation is trending down, not yet at the point that we want, which means for now it seems to be a soft landing. Even though if you look at the real data, we also see a lot of Americans that are tapping in their 401ks and pension funds and using money that they should not be using. So yes, the US consumer is resilient. And yes, the economic data looks good. We still have high unemployment, but is it unemployment because of necessity, because people are getting broker, or is it actual good employment? I believe it's a balance between the two. The fact is that today, interest rates have not been going up. The market expectations are, let's say, pretty much positive. And if you look at bank rate data, which is the real estate data from bank rate about what we expect in interest rates on mortgages in general and what they offer, again, the trend is going down. Last week it was at 7.66%, which is lower by almost 1% compared to 1 month. And if you look at the bank rate, lowest is 6.38%, so almost 2% lower compared to what we saw a month ago. And in real estate terms, this is very positive for the average buyer. Yes, and this is something that Jerome Powell also said. We still are alive, everything is going pretty well, but Americans are still living a pretty expensive life. The good thing is that when it comes to real estate, yes, home prices didn't really go down as I expect in the past 2 years. However, with lowering interest rates, the affordability of homes will pick back up. What does this mean? We are right now in a real estate market that is very low in supply. In demand-wise, it has been going down, sales has been going down, but the prices have been pretty much staying stable because as demand has been going down and the supply has been going down, these two effects did not offset the prices. The fact is that with higher affordability that we're expected to see with lowering interest rates, we might see now again buyers coming back onto the market. Of course, sellers would react later because sellers are the ones that are selling their house and want to upgrade into something new, and they locked in 3% interest rates. Most of the loans are under 4%, which is nuts. So sellers will react later, buyers will react earlier. So I kind of expect seeing bidding wars as we saw in 2020 and 2021. What about the stock market? Yes, I said I would focus mostly on real estate, but to mention also stock market and crypto. With cheaper money, we can use more leverage. With more leverage, there probably will be a bigger influx of money in 2024. How big? I don't expect something as big as we saw in 2020 and 2021, where we literally had free money at zero federal funds rates and let's say mortgage handling around 3%. My last mortgage is at 2.8, which is nuts if you think about it from an American perspective. But we could see an influx of money. And if you go at the S&P 500 and also the Dow Jones, if you look at the past couple of days, 5 days ago, the trend again is going up by a lot. Again, expectations. You have to remember that when it comes to investing, part of it is the value today, but part of it is expectations of the market of what will happen in the future. And the expectation is positive, especially because of interest rates. The question is, will many of the zombie companies we talked about in the past survive because of lower interest rates, or will they die? I hope they will die because there are some companies that have been due for years and haven't been really creating a lot. With that said, guys, this is all for now. I don't want to go too deep into this. There are, let's say, other people on social media that are far more precise when it comes to interest rates. This is simply my 2 cents added for today. If you have questions about it, please leave a comment. I might do a video about it. If you like what I'm doing and find some value, please like and subscribe, and I'll see you on to the next one. Peace out.